Have a nice day, Professor. I'm Zhang Jingling. Today I will present the first part of our report on Alphabet Inc., Google's parent company. In the first part, Alphabet Inc., Google's parent, was founded in 2015 after Google's restructuring. It has evolved from a search engine into a diversified technology leader. Today, its business spans search, YouTube, cloud, AI, and hardware. Alphabet transformation shows its shift from ad-based revenue toward innovation-driven growth in AI and cloud computing.
Hello, Professor. My name is Liu Xinchen. Today, I'll talk about Alphabet's total revenue and business segments from 2016 to 2024. First, total revenue. With digital ads, YouTube, and Google Cloud driving it grew steadily with a CAGR around 50%, stable even when the economy went up and down. Second, revenue structure changes. Search and ads share dropped from 87% to 78%. Google Cloud rose from 2% to 12%. This means the company is moving to a different kind of income model. Finally, key growth drivers. Growth came from AI ads optimization, mobile-first ads, and enterprise cloud services. That's the core. Thank you.
Hi, I'm Sun Lu. The data I'm going to discuss next is the trend of Alphabet's R&D investment from 2016 to 2024. Alphabet's R&D spending has increased significantly from around $7.14 billion in 2016 to over $49.32 billion in 2024. Data indicates that R&D spending has been growing steadily, but the growth rate greatly accelerated between 2020 and 2024. Between 2016 to 2020, initial R&D investment increased slightly and stayed largely constant. This upward trend underscores Alphabet's commitment to innovation and its proactive response to emerging technological frontiers such as AI and quantum computing.
My name is Chu Yanxia, and this part will be market. Pie chart compares global market share of cloud infrastructure of AWS, Microsoft Azure, and Google Cloud Platform (GCP) from 2020 to 2024. And GCP claims the smallest for about 12.84%. The stacked bar chart follows the change in the market share, and GCP accounts the smallest for about 12.84%. Google Cloud, the orange part, is growing slower than Azure. In short, competition in the cloud market is becoming fiercer. Azure is a top competitor and Google Cloud is gradually making a profit. Presents the comparative market share data for major cloud providers showing a Google Cloud steady gains in percentage points. Google Cloud is growing steadily to gain market share.
Hello, Professor. My name is Zhang Fengyan. I'm responsible for the third part, forecasting. First, in the short term, from 2025 to 2030, Alphabet's total revenue is expected to grow by 10% to 12% each year, reaching about $600 billion in 2030. Google Cloud will grow even faster at 25% to 30%. While adversity stays stable, AI-driven cloud services will be a major driver. Second, in the long term, from 2030 to 2040, Alphabet will move toward an AI-centric platform. The share of advertising revenue will fall below 16%, and cloud revenue will rise above 25%, even with stronger regulations and competitions. Continued R&D investment and a strong ecosystem will help Alphabet stay a market leader. Thank you, Professor.
First part, Alphabet shows steady revenue growth, strong research and development investment, and rapid expansion in its cloud business. Its diversification builds resilience and long-term competitiveness. In the future, Alphabet will continue to strengthen its AI ecosystem and cloud services, aiming to lead the next wave of intelligent technology. Thank you for listening.